Hey everyone, it's Dave Keller here, the Chief Market Strategist at StockCharts.com. We have a special discussion for you. The top 10 charts to watch for September 2023. 2023 has been a fascinating year market-wise. We've had ups, we've now had some downs, and now we have a bit of a recovery here in late August. So what is that setting up for the coming months? We're in sort of that seasonally weaker part of the year here, August and September. Is the market going to follow along with that seasonality or show some renewed signs of strength? With me to sort of talk through those ideas and see where we might head, my guest today, Grayson Roze. Grayson, thanks for coming on today.
Dave, it's great to be here.
We did a video last month for top charts to watch in August, and I thought it was super helpful just to go through the exercise of thinking through where the opportunities might be. When you were sort of preparing for today, how was that? Was this an easy task or a challenging task to find opportunities in this environment?
Yeah, you know, it's interesting. You and I both, as very routine-driven investors, traders, this is an easy exercise because I'm doing this no matter what, right? If you're following your process, if you're watching the markets, you know, you got those watch lists and everything. So it's more a matter of just kind of going into those watch lists and picking the ones that I wanted to share today. But, you know, there's always opportunity out there, whether it's, you know, more conservative, more aggressive. There's always something happening. It's just a matter of finding it.
It's so funny. When I use the scanning engine on stock charts, I've rarely not had ideas that come out of that, right? I mean, and I think that's a good reminder. In up markets, in down markets, there are charts that are moving in whatever way you're looking for. It's just a chance. It's just a need to keep doing that consistently.
And it's like your own personal little kind of breadth measurement, right? If you're running those scans throughout all market cycles, you know, when you start seeing only 5 names coming across the screen or something, and you usually see 50 or 100, it's like your own little indication. Oh my God, things are really bad.
So speaking of things being really bad, I don't know how I would describe it. I'm curious how you would describe, you know, the first half of 2023, really through July, incredibly strong. August all of a sudden turned on a dime, and charts that had been working so brilliantly all of a sudden stopped working. We had a sudden drawdown. Now in late August, a big reversion back to the upside. When you're looking at that environment, do you see signs to be optimistic or more signs to be pessimistic, and why? What's sort of your sense of things?
I see a lot of signs to be optimistic. And you know, when I think about the markets, right, charts are not supposed to just continue higher. They're not supposed to just go up and up and up. They're supposed to go up. They're supposed to pull back. A healthy uptrend is a mix of higher highs and higher lows. It's not just continuing, you know, uninterrupted to the upside. We've really, in 2023, we've really seen a pretty uninterrupted move to the upside. And so to me, you know, we've got our little sort of grid here on the screen. We can see that what a lot of these major indexes have done is just pull back to a more sort of natural, sustainable rate of trend, really around those 50 days. That's kind of the, you know, the levels that I've been watching, are these 50-day moving averages across these indexes. To me, this is a healthy pullback to a more healthy market. We were getting a little too long in the tooth there with some of these indexes just continuing to fly higher. So.
It's funny. I talked to some of my guests on the final bar that often, because we had such a run, such a consistent move to the upside, I would argue if you're bullish, the thing you need is not for more and more new highs, although eventually you want those, but a pullback that gives an opportunity to reset that uptrend, arguably the best thing to happen. So, I mean, if it's one of those weird things where if you're bullish, you kind of want the market to come down a little bit.
You want it to cool off.
Because then you actually have an opportunity to reset and get into some of these leading names that are actually a bit of a discount all of a sudden.
And it validates your bullish thesis, right? If you see the market pull back to some of these more reasonable levels, hold and bounce, kind of like we're seeing right now, then it kind of validates you. You know, there are buyers out there. There is support in the market. We do want this thing to go higher.
It's funny. I feel like the good thing about using technical analysis, the charts will tell you when that call is wrong. I think when I was looking through some of the picks that you were throwing around, I think we found some charts that actually look pretty good. You want to kick us off and share your first charts? We're going to go through the top 10.
Let's do it.
You're up first. Where are we going?
Okay, so we're going to get out of our little multi-chart layout here, and we are going to jump over to our list. The first one up, do you want to go first? Do you want me to go first?
It's you.
You want me to take it? Okay.
Good.
We are going to go, my first pick here is going to be Cisco. Now, Cisco is a really interesting name because technically what we're seeing here, if we scroll this out just a little bit more, we can see that Cisco is really starting to make a pretty beautiful multi-year breakout here. Outperforming to the upside as well. So this top panel here on these charts that we have in ACP is Cisco or whatever stock we're looking at versus the total market. So if we see this line moving to the upside, that means that this security is outperforming the total market. You know, classic relative strength kind of view. I want to see things that are breaking out to new highs, that are outperforming the market. Cisco right now is doing both of those. What I find really interesting about this name, though, is that Cisco, being kind of a more classic, old school technology name, right? That kind of tells you something about where the leadership is within technology. If we see names like Cisco outperforming the market, it's great because it's a technology name, that is kind of bullish, that is not necessarily growthy, but it is, kind of bullish and offensive, I guess. Yeah. But it's kind of a defensive corner of offensive, if you want to think about it that way.
Sure.
So I love this chart. I love the individual setup on Cisco, but it also does kind of scare me a little bit to see Cisco being one of the best setup technology names right now. That's not the greatest sign of offense.
If Cisco looks this good, how comfortable does that make you feel about?
And we're seeing it with some other names too. Things like IBM setting up to the upside. Beautiful breakout on IBM. That doesn't necessarily make me feel great about technology. So it's interesting right now. But on its own, Cisco I still think is a fantastic chart right now. Sitting pretty above those key moving averages, outperforming the market, breaking out to new highs. Those are the kinds of things that I like to see. And we do have earnings history now on stock charts, and so if you go pull that up, you can see that Cisco has been heavily outperforming on earnings, beating those estimates and everything like that. So it's a great setup right now, technically and fundamentally as well.
It's interesting. We've talked a lot about gaps recently, just because we had a number of them, and it strikes me with Cisco, you actually gapped higher on earnings recently, and then what happens after that gap is often pretty interesting, right? So Cisco gaps higher, and then you see additional buying coming in, right? I mean, you see the price continue to go higher. That
I can't count it on the fly, but I mean, this is one down day in a seriously long uninterrupted streak after that gap higher. Pretty bullish advance here for Cisco.
Decent start to the top 10. I like that one.
So what's your first one?
So I'm going to go with the name that you made fun of me for picking. I'm going to go Alphabet, actually.
Okay.
Alphabet, and I'll get it out of the way first because I have many more creative picks to go through and really highlight my stock picking prowess. But I'm going with boring in some ways. You pick Cisco. I'll go with Alphabet. And it's funny. You mentioned before we started. It's like we own Alphabet. If you own any index fund that has any U.S. exposure, you have Alphabet in some way. Just like you have Microsoft and all the others. So, highlighting this as a unique stock pick, maybe questionable decision. But what draws me to this chart is the fact that it's going up. And I literally showed this to my 7-year-old son, Henry, and I said, just as a trick, right? I mean, is this going up or down? And he quickly looked at it and said, it's going up, Daddy. And I said, okay, there we go. I'm done.
Keep it simple.
And what's funny about it, it's similar to Cisco, right? It's above upward sloping moving averages. And just to be clear here, so what are the red 50-day?
50-day, we've got the 100-day in the orange, and we've got the 200-day actually.
Perfect.
I'm using a kind of a fun little feature here. You can actually collapse these indicators. So there's what we have on this chart, 50, 100, and 200.
So above the upward sloping moving averages is kind of my classic, as long as that stays, the trend is okay. And I think with charts like Alphabet, there's so much discussion about, are these overextended, are these overvalued? And I think if you try to define them in terms of valuation, it's hard to describe them as not being overvalued in some way. And arguably overextended, as they got pretty far away from moving averages as they kept making new highs. But now you've seen a bit of a reset. What's interesting about Alphabet is it didn't really break down. Some of the technology names like Apple, Microsoft especially, kind of broke down through moving average support, recovered a bit, but Alphabet actually hung in there okay. And if you look at the peak from, I think that's sort of May, June, then we pulled back to the moving average, we gapped higher and held that breakout level, and sort of that idea of a level of resistance, we break above it, we retest it, and then continue higher. It's kind of that classic technical setup. So I think that's a pretty encouraging chart. What also draws me to a chart like Alphabet is the RSI at the bottom, and I appreciate including that.
Yeah, of course.
So,
14 period.
Connie Brown, Andrew Cardwell have popularized this idea of the range of the RSI, right? So when conditions are bearish, when a trend is down, the whole RSI kind of moves lower, right? So you become oversold when you sell off. You rally and you don't really get above like 50 or 60, and that's sort of the sign of a bear phase. In a bullish phase, the entire range pops up a little bit. And if you look at the chart of Alphabet, there's a clear change from what it looked like in 2022 and what it looks like in 2023. So, that for me is one of those signs of a great rotation from a bear phase of 22 to a bull phase of 23. I'm inclined to stick with something like that that's working until it stops working, and I'm not seeing anything on the chart telling me that that's it yet. So a chart like this I think is good. And again, thinking of it as a broad market indicator, how bearish do you want to be when Alphabet's making new 52-week highs? Probably not too bearish, I guess, is the takeaway there. So that's my first pick, Alphabet. I'll stick with it. What's your number 2?
Yeah, okay, let's open up our sidebar here on the right. My number 2 is kind of building off of this energy trade that we've heard a lot of people talking about. So I'm going with ConocoPhillips, COP. Yep. Purely from a technical standpoint, we've got a beautiful breakout setting up right now. It hasn't quite made it. I want to see this thing continue to run higher, but definitely some key levels to watch here. And again, outperforming the market. When we look at this top panel, this thing is outperforming the market, but it's backed by strength that's been coming out of energy. So we've seen XLE continuing to move higher. We've seen a lot of these energy names continuing to move higher. A lot of talk earlier in August, right, about some sector rotation out of technology, out of those kind of growthier spaces that we're leading in 23 into energy. Now, that's kind of stalled a little bit. It's been really interesting to watch that. But in some sense, that actually gives me some more confidence in this chart because we're kind of stalling at that breakout level. And if we can then continue through it, that means that we really have sort of consolidated around that breakout. We're pushing higher through it. That actually kind of gives me some confidence in that breakout. So XLE is another one that's actually set up right now. And ConocoPhillips is, I believe it's the 4th largest holding in XLE. I mean, this is a huge energy name. So to see this thing continuing to the upside, gives me a lot of confidence in kind of energy more broadly, but this thing is set up really beautifully right now.
It's so interesting how energy, in some way, I feel like energy, maybe healthcare, are sort of those forgotten sectors that have just been underperforming for a while, but really started to rotate higher. And the relative strength on COP and a lot of it's not, I feel like you pick COP, which is a decent pick. There are a number of other charts that are kind of set up this way.
It's hard to pick one from
It's hard to pick one of them. And that's why something like, this is one of those times where something like the XLE or one of the like oil services, one of those broader ETFs can be a little better.
Or the equal weight. That's been another really interesting way to look at energy right now is RSPE, I believe is the symbol, the equal weight sector ETF for energy. Another one that's moving to the upside. So it's not just these huge names that kind of dominate that space. It's really been more broadly spread throughout that space.
Felt like a bonus 11th pick there, though.
That might have been. Might have been. Yeah, we're throwing a couple energy ones out here.
All right, I'll go with my second pick. I'm going to do Affirm, AFRM.
Great chart.
Now, this is one, a number of my picks, I will do a bit of a cheat and tell you this is representative of, I think, a space that I think is good. And like you talk about COP with energy, I think it's hard to pick a particular one. When I was originally thinking of this pick, I immediately was drawn to Visa and MasterCard, right? Payment processors that have really started to show signs of strength. Visa was struggling for a bit, MasterCard's struggling. Now that's changed. They're both kind of breaking out. But in the interest of kind of diversifying from I guess, technical diversification, I didn't want to do things that are all just kind of breaking out. So what are the things that are a little earlier on in the process? And what strikes me about Affirm, it's one of those that I think illustrates a rotation that I really like to capture, which is a distribution phase, meaning something's going down, right? Then a consolidation phase or a bottoming pattern, right? A basing pattern. I think if you look at the basin on Affirm from the low end that we established sort of the 4th quarter of last year. We retested that in April, May, and now we're back retesting the highs from kind of January, February. So we're in kind of this basing pattern. I love charts like this once they break out. So I think Affirm is with an asterisk as once we break above this level, right? Once we get above 20, once we break out of this base, I think that completes the rotation from a downtrend phase or what I call a distribution phase, kind of a consolidation, and now a new accumulation phase. And what interests me here is there are a lot of alphabets that are sort of in this nice uptrend, kind of consistent players that I think are pretty, still good charts until proven otherwise. But something like this is something that's been beaten down below the 200-day moving average. And I think from a purely technical perspective, it tested the 200-day in January and failed. And I thought that was kind of noteworthy. We sort of broke above the 200-day in April, May, and now we've held it on a couple pullbacks.
We're holding it from the other side, too.
And so now it's sort of giving that indication. Sort of, if I would sketch out what is a standard bottoming phase for a stock, I'd probably list out all these things that I'm seeing on Affirm. And we're just waiting for that final thing, which is we break out. And I think, if the market continues to recover from here, charts like Affirm probably are really good places, which are nowhere near overextended or overvalued based on their trend, because they're pretty undervalued relative to where they've been the last couple of years, with a lot of upside. So my risk reward hat, which I'll dust off because it's been tough with things that have been so extended, but when you think about potential upside versus downside, I think something like Affirm actually presents upside potential, which which feels a little rare. I think a lot of charts have been working so well. Names like this that are actually rotating are kind of a rare find, but good opportunity.
There's been a lot of this throughout the markets as a whole, but especially technology. One of my names later in the show is kind of a similar concept. Do you worry? I got to ask you. Do you worry at all about kind of overhead supply with a trade like this? How do you think about that?
Completely. Oh yeah. So and again, I what's tough for me in this sort of discussion is I will tell you my kind of favorite chart is a strong trend that's pulled back like that. The higher low thesis is something that makes sense to me. That is, my brain is wired that way. So something like this is a little uncomfortable because it's not that. And I immediately see overhead supply. And what you're referring to is you rally a little bit and you're hitting this range where we've already had a ton of action. So you're assuming you're able to get through there. But I like this sort of opportunity. If things work for me, if things more broadly speaking work, names like this are probably going to get propelled as well as other names. But there's a lot more upside potential with something like this. So that's why I think it's a good one. But I would completely be drawing a big line at that high from third quarter of 22 and be focused on that as a short-term objective.
I love charts like this too, where you can draw those very clear horizontal lines and then manage risk around them. That is the key. That is absolutely the key.
Agreed. There you go. Your next pick,
All right.
if you would.
My next pick, we've got a semiconductor name. We're out of the C's, we're into the L's here, going alphabetically. I'm pulling up Lam Research. Now, Lam Research, a pretty substantial. We can actually open up our full quote down here and see the market cap of this name. Pretty substantial semiconductor name. You can see it right there, 93 billion. Large name, but this has been a space, obviously, that has got a lot of attention for years, really, but especially in 2023. A space that was very beaten down in 2022 has seen a bit of that recovery, largely on the backs of names like NVIDIA that have been powering this space. But so many incredible setups in here, and it really is a space, I think, that has legs for the future because everything is being technified, digified, everything, cloud computing and artificial intelligence. I think this space just has legs for years to come. But from a technical perspective, a lot of the names in this space are setting up really beautifully. So if we actually scroll this out, we can kind of see Lam Research, again, in 2022, really got hit to the downside, has pulled back quite substantially, but has now made its way back up to those all-time highs, is starting to make that breakout. And it's doing so, again, by outperforming the market. So we can see this relative strength line moving up. This has been a huge outperformer. Let's get this on to, let's say, 3 years. And we can see over the last 3 years, this is outperformed by, 58%. And that's through a huge correction. So I love names like this that have a history of winning, a history of outperforming. They've, again, taken that healthy pullback, in this case, a pretty substantial one, but made its way back to those highs and breaking out. A lot to love on this chart. In sort of more of the short term, it has been kind of consolidating here, has made a bounce, and is now trying to kind of retest some of those short-term highs that we've been seeing, but all above the 50. And again, I love those moving averages just continuing to move higher, really holding those as well on some of these pullbacks. That's really nice to see. So Lam Research and the semiconductor space, and that's, again, kind of like energy right now. It's tough to pick one. There's so many in that space. There's some that have kind of overheated, but there are others that are still really perfectly set up. And from a risk-reward standpoint, being able to manage around some of these breakouts really easy. So
we're in baseball season. We're going into September. Our hometown Mariners having a decent stretch here, for the record. If you've been
you didn't
watching.
Provide any wood.
I was going to say, I almost am going to jump over to get to the. But then I call this a fat pitch chart, which is sort like a pitch you just have to take a swing at. It's right over the plate. One of these names that's in a good uptrend and then pulls back to the ascending 50-day moving average. It struck me when the market starts to correct. Names like this that are able to hold the 50-day or the 10-week moving average, a lot of times it's really good setups. For now, it's actually holding up really, really nicely. It's funny, the RSI that we have at the bottom, we're talking about that range. This is another one like Alphabet, where the range has just been in a pretty constructive setup. Like the momentum's never getting that bad. It's sort of one of those good charts.
This is the turning point, right? It's kind of the end of 2022. If we scroll this out a little bit more, look how the RSI was really struggling to ever get above 50, and now it's struggling to ever go below 50. That's kind of exactly what you're talking about, that change in character of the RSI. Great way to look at that.
Now, how do you think of now I'll ask you a question. This is one of those names, the problem I have with it is it's testing basically all-time highs. You have to be confident that that's going to work. How do you sort of Is that an issue in your head looking at this versus other names?
That is the opposite of an issue to me. I do not like overhead supply. I don't want anyone on the other side of a trade that I'm putting on to be saying, oh my God, if I can only get Grayson shares back up to $100, then I'm going to sell it. I can't wait to get those shares back up to that level. I've been waiting to sell for years. You know, the thing that you have with all-time highs is no one above you. No one is watching that stock continue higher saying, oh my God, I just can't wait to sell at this level. Everyone's patting themselves on the back, cheering because the thing's at all-time highs. And the other side of that too is that if you think about any stock that's ever made a historic, huge run, the big winners out of history, you know, names like Apple and Nvidia and things, what they have done is make a series of all-time highs for a long period of time. And so you could think that the first time they ever made, you know, sort of their second all-time high, let's say, first time they ever broke out to an all-time high, it might have seemed like it was stretched, but they went on to continue that for years. And that's how some of these big outperformers, you know, really take shape. Every stock that has ever been a huge winner has made a huge number of all-time highs.
Had to make a first new all-time high and then made a bunch of those. That's very much the O'Neill methodology, which I think has a lot of value. That's a good chart. All right.
So I love stuff like this.
I'm with you.
Out.
Okay. My next pick, I'm going to Murphy USA, MUSA. And this is, we both have a similar pick kind of in that consumer discretionary space. And so this was one that, you know, I thought about different names in this group because specialty retailers and a lot of in this group have actually done quite well. Some of them arguably pretty overextended. This is one that feels a little earlier on. I thought this was a great illustration of a classic pattern called the cup and handle pattern.
It is. Oh my
which
gosh.
is a big rally into resistance, and that's what was sort of the end of 2022. So think about that. This is when the market is getting absolutely crushed. MUSA is actually making higher highs and higher lows. That's why the relative strength is so strong on the left half of this chart. Then 2023 begins, it actually pulls back quite a bit, but has this big rounded bottoming pattern. And then coming June into July, we retest the highs, and then we have the shallower pullback. And look at how the shallower pullback right to that ascending 50-day moving average, like some of the charts we've looked at. Now it's sort of setting up in that basic pattern. So similar to Affirm, I think this is one that is right at that trigger point. So I think this is an important one to watch because if a chart like this is gonna, you know, is really gonna work, it has to get above that basing pattern. And I thought it was good just as I think it's a great potential idea here, but I think it's also a great illustration of the importance when you have a technical pattern of thinking of the setup, which is the first part, the trigger I would think of as the second part, and then the confirmation is the third part. And I think thinking of patterns in those three phases is really important. A lot of times we see something, we say, all right, that's a head and shoulders, before it actually has played out. And then all of a sudden you get into all sorts of trouble and behavioral biases when you assume a pattern is going to emerge, right? So something like this, it's setting up as a cup and handle. So I think you've checked that first box, which is the setup. The trigger is now what we're waiting for, which is we break out of that base. And I think the breakout is super meaningful. Then it's the confirmation. And people like Larry Williams, who we've done a lot with at Stock Charts, others like Tom DeMark, even the great John Murphy, have talked about the importance of follow through, right? Once you have a signal, what happens right after? Do you have another day of moving higher? Do you have further validation, volume, whatever that tells you additional buyers are coming in? So I think MUSA might be a really good chart to watch for potential upside, but also just to show those different phases, I guess, and where we're set up with it.
Fundamentals of technical analysis.
Right. But I think this one, I mean, clear resistance, really close to breaking out. I think that's a constructive chart with upside potential, assuming that trigger is fulfilled.
That's a great chart. I got to highlight one little feature here because I love this. I've got it turned on these charts. Down here in the bottom right corner, this little gear icon, you can open that up to get this kind of quick settings menu. And this last price reference line, if anyone is watching the show and they're wondering, what is this dotted line that I keep seeing going across? This is a great example of why this little tool is really helpful. So this is just going to print a horizontal dotted line wherever the last trading price is. And in this case, it makes it incredibly easy to see that pattern, because you can see without having to draw any lines yourself, you know, that last price reference line kind of printing exactly where we are on the top of that cup. I
love that.
So really nice little feature there.
Nicely
done. Back to me.
You're up.
Okay. My next pick is going to be ROST stores, and this is actually a little bit similar to the Cisco conversation for me. So purely technical. Let's take a beat on that topic. Another great breakout. And again, you know, that last price reference line, you can see exactly how close this is to the breakout level. I love to see things like this that are outperforming the market, breaking out to new highs.
Yeah.
Again, you want to see, just like you're saying, you want to see that confirmation, you want to see that follow through. This is set up for a breakout, but it has not made the breakout. So the key for me is watching this actually move through that level. RSI getting a little bit overbought here, so it'll be interesting to see what happens. Might be another example where we see something like that Murphy pattern, where you actually pull back, have kind of another little consolidation period, and maybe this prints another beautiful cup and handle. What's interesting to me about this is that it looks a lot like another chart that's out there right now, but kind of shifted in time. If you pull up a chart of TJX, do that just for fun. If we pull up a chart of TJX, this is a very similar pattern, but from a couple of months ago, right?
Yeah.
And it's in the exact same space. It's in that apparel retailer space.
Right.
So this was a name that I was following a while ago that made that breakout. And if you measure this move, it's up about 13% off the breakout level.
Yeah.
What's interesting to me about ROST stores is that it's basically doing the exact same thing right now if it can actually make that move through that breakout level.
Right.
The reason that I mentioned Cisco at the beginning is that I got to say, consumer discretionary outperforming makes me feel good about the market. ROST stores outperforming consumer discretionary does not make me feel good about consumer discretionary outperforming the market. So it's kind of the same thing as Cisco, right? If you see technology leading, but it's being led higher by names like Cisco and IBM, doesn't make you feel that good about that technology leadership. It's kind of the more defensive side. Names like ROST stores, not the most offensive corner of consumer discretionary.
That's fair.
It's great to see it leading, don't get me wrong, but if I'm going to see consumer discretionary really lead, we want some of those sort of higher spend, higher growth, kind of more aggressive names to lead that space. So this does concern me a little bit, but from a pure technical standpoint, it's a great setup right now. It's a great chart. So
it's funny. What your point that you just made, I think, is really, really valid. Which is, thinking about what names are working and then backing into what that tells you about the overall environment.
Right.
But it's like at the end of the day, I always tell people it's always a good time to own good charts, right?
Yeah.
So regardless of what you think should happen or could happen, what the environment is, if the chart is working and the setup is good, I'm much more inclined to follow that than to not take a shot at a good chart because I just don't think it's the time. I mean, the chart's going to tell you if it's not the right time because it'll stop going up.
Right.
But for now, interesting setup.
We see this a lot with utilities, right? When utilities start to lead, you get a lot of beautiful setups in utilities. And if you want to trade them, they're there for you. But a lot of people see utilities starting to lead and they go, oh my God, I don't want to be involved in this market. I'm getting out. Well, the other side of that is I don't want to be involved in anything but these great charts that are setting up in utilities. So we see that through all corners of the market, not just that space. But
another argument for relative strength too, right? And focusing on what's actually working at any point. All right, my pick number 4. I'm going CELH. I am boldly picking a consumer staples stock. You're welcome for diversifying our sector distribution here of our picks. This is one that the beverages group, right, which and soft drinks and others have done. There are a number of names that have actually done pretty well. And consumer staples as a whole, pretty rough. And it's been a tough environment. And I'm thinking of Hershey's and ADM, a lot of the food products names have been absolutely crushed and could be opportunity there, but I don't, from a technical perspective, I think hard to justify it. What's interesting about beverages is they've actually been trading in a much more of a position of strength. So one of the charts that I know that I've seen used before really focuses on the different stages of relative strength. Right? How is this doing relative to its industry, relative to its sector? And if you look at these names, they've done well relative to the broader market, but especially relative to consumer staples. And I'm thinking of my time working with institutional investors. A lot of times they would need to own something in staples because you couldn't be completely naked. You couldn't be out of the sector. So you had to be somewhere in the staples group. So I would naturally look at something like this.
We can pull that up. So
perfect.
Here we're actually now looking at that industry group in the orange line versus the consumer staples sector. And
so
there you can see that outperformance that you're talking about.
Soft drinks versus the sector. Just above there in green is staples versus the broader market. Obviously a disaster, but this shows you're in a strong stock in a weak sector, but the group is holding up pretty well, right? And so I think that's the general thesis to this sort of chart. But going back to, I forget which name it was that you showed, maybe it was Cisco or something with the gaps on earnings. I think you're seeing that here too. You're seeing a series of gaps, and then you're seeing additional buyers come in. And what's interesting to me, when you see a stock that's gapping on earnings, but then it continues higher, is it tells you that it's not just about it basically tells you that we're gapping up on earnings, which is encouraging. That means something good was heard, but then additional buyers are coming in and even pushing the price higher, right? A lot of times you'll see a gap on earnings and then we immediately sell off. And you can see that's a bunch of investors that were just thrilled to get a bit higher price so they could cash out and move on to something else. That's not what you're seeing on something like Celsius Holdings. You're actually seeing the chart continue to go higher. So charts like this are tough for me because they're a little more extended. I'd much rather buy things on a pullback. I'd much rather buy this when it's at the 50-day. And so I think tactically you want to play that a little, maybe a little more thoughtfully. So buying, every time we make a new high is tougher. I would much rather wait for a pullback and be a little more tactical about that. But the fact that it's showing strength around earnings, the fact that additional buyers are coming in and pushing the price higher, I think is the long-term story that I'm excited about. So this is a sector I would not be overweight for any reason at this point from a technical perspective. But I think it's a good illustration that even in a rough sector like staples, there are good charts. So good argument for using the scanning engine, the alerts as a way to say, okay, this is a tough sector, but are there opportunities? And I think in things like beverages, they're out there.
Now, I got to ask you a question because we've been talking about the RSI. I mean, when you see, obviously this has been gapping higher on those earnings, it's been really run to the upside, but when you see RSI values, this overbought, how does that make you feel? Does that concern you?
So I think it's right, and I think it's a time frame question, right? I think it's, and even with some of the names we've shown that are overbought today, what that tells me is to be patient. Just because a stock is overbought, that's not a bad thing, and I feel like we've hurt investors in some ways if we ever say that overbought is bad, oversold is good. Even though that can be right from sort of a swing trading mentality. But in terms of overall structure, overbought is good. That means the price is going up. Does it mean today is the day you want to maybe pull the trigger? Maybe not. And so for me, this tells me good chart, put it on a watch list of things that I'm waiting for a pullback. And that's where you want to start accumulating, right? Buy on the dips, ride the price higher. And so I think this is a long-term setup that's waiting for the right tactical opportunity. This tells me to be patient, and that's why I think it's a good one to watch in September. Look for those pullbacks. A pullback to an ascending 50-day might be a really ideal entry point.
It's always interesting when you see a name that's this strong, outperforming by these kinds of numbers in a space that typically is so much more conservative.
A tough space. Agreed.
But
it's working.
A great chart.
Your final pick, I think, number 5.
We're on to my final pick. That's kind of wild. So this is going to take me back to kind of that Affirm setup that you were looking at with that pick earlier. Now I want to zoom this out a little bit to get some context on Splunk, which is my 5th pick. This is a name that represents a lot to me. One of those names that was up big during that kind of pandemic era, totally gave it all back in 2022. Huge decline. I think this thing was down 70-something% from peak to trough. Has now rallied back. And to me, what this represents is something that we've seen throughout the technology, throughout the kind of growthy-oriented corners of the market in the last year and a half. We've seen this kind of classic, just like you're talking about with Affirm, we've seen this classic Weinstein stage analysis kind of thing play out. That's exactly what this is. Now, if you're not familiar with stage analysis, it's basically 1, 2, 3, 4. 1 being consolidation before an uptrend, 2 being the uptrend, 3 being consolidation at the end of an uptrend, and 4 being distribution, just like you were talking about that decline coming off of it. So you can kind of think about it as sideways up, sideways down. This is a great illustration of stage analysis, and it's a great illustration of why stage 1 into stage 2 can be so powerful. So we've seen Splunk make this huge move lower throughout 2022. But if we now kind of zoom in, we can see there's that decline. Here's that stage 1 base. We've seen this throughout so many corners of the market, especially technology. These names that got hit for 18 months, they've now been consolidating throughout 2023. And when you see a breakout above some of these levels, they can really start to run. We saw this, for instance, with Netflix, which did a very similar thing much earlier on, made that kind of big decline, big consolidation period, big breakout above it, and has been running higher ever since. So I'm watching some of these, I've been watching these kind of classic stage analysis types of patterns throughout all of this year, really. But when I see something like Splunk that's kind of following that same trajectory, it definitely gets my interest. Also, when you're talking about gaps and follow-throughs, I mean, here's a big beat on earnings, and it's just following through a huge move here from Splunk. Now, in the short term, that does scare me just a little bit. I mean, this thing is probably a little bit extended now.
Yeah.
But when you zoom out and you see where it is kind of relative to that consolidation, this is really just starting to make the breakout.
Yeah.
So again, I want to watch this. Ideally, it would make that breakout and it would come back down to actually test it from the top. That's what I like to see with these kind of stage 1 breaks.
Yeah.
Really any breakout, but especially something like a stage 1. I want to see some validation of that breakout.
Yeah.
I want to see it continue to outperform the market, and I want to see it make that breakout, come back down, test it, bounce, and move higher. That's going to be sort of the confirmation that I need to put on a trade like this. But Splunk, just to me, it represents a lot. It represents a similar pattern to kind of what you're saying with Affirm.
Yeah, I was going to say, this is kind of what I want Affirm to look like very soon. Is the breakout.
Exactly.
Yep. And what's interesting too is you're mentioning Weinstein's stage analysis.
Yeah.
Not a new theory. This is one that's been around, but
goes back a long time.
But it still kind of works, and I
Totally.
love.
And it's just absolutely simple.
It's so straightforward
elegant in its simplicity.
Yeah, and I think things like that have stood the test of time, and I mean, in most, if not all, the things we're doing have done that, right? I mean, these are things that have worked over multiple cycles, and that's why I find that sort of approach pretty. It's been validated.
It's really cool that you're bringing up asking your son about charts, right? Because that's how I got into technical analysis. Was that my dad did the same thing. He would bring me charts as a 10-year-old, and he'd say, "Is this going up, down, or sideways?" So the first time I ever heard about stage analysis, it resonated so much because it was like, "Oh, hey, I've been doing that for a long time. I get it. It's either up, down, or sideways. Tell me what it's doing."
Yeah.
So, same kind of deal with
Still works. Yeah. Still works. All right, we're to my last pick.
Yeah.
Which is a different one. It's in the industrial sector, WTS. Now, what's interesting about this one, what I like about this one is John Markman is an author that we've done a lot with at Stock Charts TV. He's a fantastic, just really thoughtful strategist and market practitioner. He wrote a book called Fast Forward Investing, which talks about some of these broader themes, a number of which we've represented, things like AI, driverless vehicles, electric vehicles, sustainability. Like these are all, there's no denying that these are themes that are going to be something we'll be thinking about for years, if not decades. This is a play on water, right? This is a company that's basically trying to make water more accessible and work for more people. It's a mid-cap name, so it's a little smaller relative to others. So I like the broader theme, but again, for me, the idea that water is a scarce resource and something we need to work on and going to be more and more of an issue is good, but is that the right lever to, what lever do you want to pull to play on that theme? And I think the technical setup is really good. What I love about this name recently, I run a series of scans all the time, as I know you do as well on stock charts. One of them that I run a couple times a week is stocks making new 3-month highs and new 3-month lows. This just gives you a working list of things that are working and things that are not working. And I found by being aware of what names are in what buckets, I'm able to capture trends earlier. I'm able to recognize shifts in leadership. And it also, right now, a bunch of energy names all of a sudden start popping up, and it's like, okay, this is a theme I need to be aware of.
It's kind of that bottom-up approach.
100%. Now, in the industrial sector, there have been a number of groups that have done particularly well. Things like aerospace, a number of aerospace names have popped up. Building materials for a while, things like BLDR and others have had these really good runs. This is one that's actually just starting to come up on the scan. What I like about it is it's made a classic uptrend pattern of higher highs and higher lows. Most recently, we pulled back to an ascending 50-day moving average. It's sort of one of those classic fat pitch charts. And this is one I wanted to illustrate as a pretty good setup. I think it checks all the boxes of a strong kind of medium-term trend, a weaker short-term trend. It's pulled back to a 50-day. It's bounced off of there, showing that there's accumulation that happens on short-term weakness. I'm inclined to assume that there's an inertia to the markets, that as long as this pattern continues, I'm inclined to follow it. And I've been doing a lot with RSI, I feel like, for a long time, but recently I've been thinking a lot about what the momentum picture tells you about the overall trend. The RSI pulled right back to around 40, which is kind of the sweet spot that I'd love for it to kind of stall out there before we rotate higher. So a chart like this is kind of an interesting setup. And in a sector, industrials, that I think tends to do well in an environment like we're in, right? I mean, I think the extreme strength in growth stocks in a period of higher rates has been sort of a head scratcher at times. Charts like this working make a lot more sense to me. And so I like, as I thought about the 9 other picks and thought about what's that last one, something like this getting into industrials, which is a sector I feel like you want to be focused on at this point in the cycle, made a little bit of sense.
Industrials is kind of that sleeper sector that doesn't get the attention. I feel like energy gets all the attention because people love to say everyone's ignoring energy. Technology and consumer discretionary obviously get all of the attention because everyone loves to talk about the growthy names. Industrials are kind of that sleeper that end up working incredibly well. Huge winners in this
and
space.
The problem is they're not sexy. These are like building materials, heavy construction, water, infrastructure. It's infrastructure, but infrastructure, I mean, I don't know if we've noticed, but there's a lot of upside for infrastructure in the US, I would say, and elsewhere. So a play like this, I think, gives you that opportunity as well.
I love this setup. I think this makes a ton of sense. And I got to point out one thing on this too. So again, in kind of the short term, you've seen this breakout over here. It's made that breakout. It's come back to test it right on the 50-day, and it's bounced higher. Now it's been, kind of consolidating above that breakout, and it's starting to make it again. It's a great chart.
I think I'll take it. This was awesome. We'll do this again sometime, but 10 charts. That was actually fun to go through the exercise, but also interesting. We did go through these independently, full disclosure, and it was really cool to compare the list and see what kind of names came out of there. But I'm pretty excited that we touched a number of different sectors. We had
and some similar patterns
setups
and things like that too. That's really cool to see.
The opportunities are out there. I think if you know where to look for them. This was awesome. Yeah, run those scans. All right, keep at it, folks. Thanks so much to Grayson Roze here at Stock Charts for joining me, putting our ideas on the line and sharing with you the top 10 charts to follow in September of 2023. We hope you found that this was an instructive way of thinking about different technical setups, certainly how to use the Stock Charts platform to scan for ideas, to analyze those trends, and really focus on actionable opportunities based on the best practices of technical analysis. For Stock Charts on Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a good one.